To the Point with Michael Williams.
This is what happened Wednesday. The Dow kept on falling, typical of what's been happening, the ups and big downs, and back up again since the start of the year. Are we heading, some say, toward a possible global recession that would envelop the U.S.? Are we expecting a turnaround? What should you be doing with your money? Good morning and welcome. Another tough week on Wall Street, but we have two of the very best here. I always count on them to give me and you advice that will help kind of rock or steady the rocking boat sometimes. A lot of nerves right now, and it's happening as we look at what's been going on. Joining me, two familiar faces. Greg McBride, Chief Financial Analyst at Bankrate.com, and Dave Wentley, Personal Financial Advisor. Again, they're outstanding, good friends of ours on To The Point. Gentlemen, and Greg, I'll begin with you. Simply put, only because it's in alphabetical order, were we expecting this at the start of the year, A? B, give us a perspective on what we're seeing and the hand-holding you're doing, the kind of questions we're getting. Then, Dave, I'll put the very same question. You take it away and lay the table for us.
Well, volatility, yes, to be expected. And, you had me on the show a few weeks ago at the beginning of the year, and I said at the time, I said, look, buckle your seatbelt and just kind of hold on, because it's going to be one of those years with a lot of downs, but a lot of ups. It's going to be just very choppy. So we've seen mostly downs since the start of the year, but that type of volatility, when you look at the backdrop of what's going on elsewhere around the globe, weakening economies elsewhere in the world, sharp declines in commodity prices, not just oil, but all commodity prices. This type of volatility, really kind of par for the course at this stage. Here's the takeaway, though. The fundamentals on the U.S. economy still very solid. And as long as that remains the case, I think this is nothing more than just a correction. And Michael, it's a carbon copy of what we saw last August. China devalued their currency. Everybody freaked out and was worried, gee, how much is their economy slowing? Market dropped 10, 12%, and it's like deja vu all over again.
Dave, well, yeah.
I would agree completely. Some of the phone calls that I received this week, or last week, is this 2008 all over again? And, it is not. It's not even close. It is exactly what we saw last August. We need, oil prices have come down. We need to see oil stabilize. That's not going to happen overnight.
That's a supply and demand issue. There's a lot of glut on the markets, including U.S. product. Saudi Arabia refuses to lower its production quotas. Iran may be putting a lot of product on the market. So we've got a supply-demand issue there. But Wall Street doesn't like it, because even though Main Street gets a break, Wall Street says energy producers and industrial side of the house could take a hit. Is that fair?
You're going to see layoffs. You're going to see bankruptcies. There's concern that
in the oil patch.
Yes, and also oil-related industries. But also you're going to see, some of these loans going sour. And so there's a concern that the banks are going to have to absorb some of these losses. This is temporary pain, but I think longer term, it's a net benefit to the economy and certainly to us as consumers with lower oil prices. A lot of pain short term, very quick, very dramatic, as we've seen in the first couple of weeks of the year. But I think as we work through the year, you're going to see the lower oil prices filter into the economy with more spending, more consumption by consumers.
I know you two have had phones to your ears all week from investors saying, oh boy, and you get it from ranges of investors. Your younger investors, your middle-aged investors, your investors who are at or in retirement. What's the advice you've been giving them?
First advice, I always say, and I could quote your weather team here, the time to prepare for a hurricane is not when it's making landfall, it's well in advance. So if you have a plan in place that can weather this kind of volatility, and this one's pretty brutal. I mean,
it's no fun. Never is.
It's not. It's not fun. But after things settle down and settle and regain their footing, they then take a look at, okay, maybe it's too much volatility. If you're a young person, or if you're in your 30s, 40s, 50s, you're contributing every paycheck to a 401k, keep doing it. Don't interrupt that discipline. You're actually going to be buying at a much lower price with these reduced prices.
But Greg, if you're well diversified, even as that at or in retirement investor, it seems the mantra you two always have, correct me if I'm wrong, is if you're well diversified, that means as an older investor, you're going to be more tilted to bonds than stocks, but still have a mix, but more tilted to bonds than a younger investor. But if you have the proper diversification, everyone should to some degree sit tight despite the pain, or am I wrong there?
Well, yeah, your diversification is based upon, and your overall asset allocation is based on your age, your time horizon, your risk tolerance. Those are the things that don't change overnight. Those are set with a long-term view. And so, particularly for people that are in or near retirement, what you're really most concerned about is the income that's being generated from the portfolio. And in particular, stocks, where stocks have been volatile, what you really should be focusing on is the sustainability of those companies paying that dividend. And for most industries, except energy, that's not a concern. You're going to continue to get that dividend. So just ride out the price volatility because, again, what you really are dependent upon is not the share price, it's the ability for them to continue to pay that dividend.
Dave, you're shaking your head.
Yep.
Is your biggest worry, have you had to talk people this week out of saying, I want to sell and get
Yes.
out and sit on the sideline? Why is that a mistake? Some say, I want to cut my losses. It's human nature.
Because you're selling at the wrong time, very simply. And when are you going to go back in? When the market rebounds?
Then you're
Often-
trying to time the market.
Yes. Well, the market often rebounds very quickly out of nowhere. I mean, you could literally go out to lunch and come back, and it's up 300 points out of nowhere. Well, if you're sitting on the sideline, you're going to miss those important early moves.
I read a study once, correct me, I don't have the exact numbers, but since the 1920s till today, if you took the biggest up days of the market through the Depression, the Great Recession, wars, and the like, it would come to a relative handful of days over 80 plus years. And if you weren't in the market at that time, you missed out on what would be the preponderance of the net gains. Is that fair?
That's spot on. That's exactly right. And here's the thing. Those 10 days, they were not consecutive, right? They're just random.
One
And
year
so
here, one there.
You've got to be in it to win it. And that timing the market, here's why that is such a lousy strategy, is you have to make not just one perfect decision, but you got to make two, right? You have to make the right call on to when to get out and the right call on when to get back in. And people aren't going to do that.
People lucky enough to have you two say, I've got somebody who's insisting I'd be well diversified, that I have my investments based on my age and my time horizon. But there are a lot of people who have to do it themselves or prefer to, who might be worried they're not. What should their stress tests be right now if they don't have the kind of advice every day that you have, and what should they do about it, if anything?
I would go back to what we were talking about. I would review your age, your time horizon, your risk tolerance, and I wouldn't do anything until things begin to settle down, and then say, okay, I do have a longer term horizon, 5, 10, 15 years, but I don't like all this volatility. Then maybe you want to move some money into safer investments, something that's going to be less volatile than, say, a growth mutual fund.
Mm-hmm.
Right. I think, look at this past week just as perspective, right? The first half of the week, stocks went nothing but down. And then starting about Wednesday afternoon, they've gone basically up ever since.
Bit of a lift in the oil patch. Oil was back up a bit.
Exactly.
Europe talked about more stimulus.
And markets tend to overcorrect on the downside, right? And so what helps markets form bottoms is when the bargain hunters come in. And I think we saw evidence of that in the second half of the week. So again, it just illustrates the point we were talking about a minute ago about you have to be in it to win it, just the unpredictability. How did you feel the last half of the week when the market was going up relative to how you felt the first half of the week when the market was going down?
I read a psychology study that people's feeling of pain about markets going down is greater emotionally than their sense of joy when markets are going up. I don't know how true that is.
I would believe
it
that.
is true.
I would believe
You
that.
hear that a lot. Having said all that, I don't want to be contradictory. What I hear you saying is if you have a well-diversified plan, stick with it. If you don't, look at ways you can get a well-diversified plan, but the answer is not to jump out of the market. Having said all that, as we look now a little more macroeconomically, Merrill Lynch late in the week raised its projections for a global recession from 15 to 20%. There's been talk from some analysts, U.S., who say, possibly. Others are saying the fundamentals, while slow, are solid. What is your sense, getting away from investors for just a moment, about where we are? Are we headed perhaps for recessionary headwinds this year or late this year on into next? What is your sense of that, U.S.-wise, and of course, inextricably, we're tied into the global economy?
U.S.-wise, I think the odds are very remote. We were talking before the segment about some of the different studies we've seen that peg odds of a U.S. recession about 20%. So if my math is correct, that means there's an 80% chance we're not going to have a recession this year, right? So
I like the optimism. Yeah.
And the fundamentals are solid, right? The economy's still growing, albeit at a slow pace. We're seeing consistent job growth, better job growth. We're finally starting to see wage gains. That's not the makings of a recession. The only thing we have to fear is fear itself.
The China question, though, what about that? A lot of people call in or ask, what about the China question? Second biggest economy, we don't know what's going on with their economy. We don't know what's going on with their currency. We don't know what it's going to mean for U.S. imports and exports. Well, imports, it would be a boon. Exports, not so much.
What you saw towards the end of, or the middle of last week when the market settled, that was on the news that the GDP in China grew at 6.99%, just a hair under 7%. That's slow for them, but that's still, I think it puts a footing under the China economy that, look, it's not literally falling out of bed. It's going to be there. I think what we need to see for the market to settle down, or China to regain its footing, we need a little bit more clarity in what their economic numbers are.
A lot of criticism that they're being opaque about that.
They can be very opaque. And I think if we see oil stabilize a little bit north of where it closed last Friday, which was above $31, I think you'll see the markets tend to settle themselves down.
Got a couple of minutes left. Whenever we're done, you two cover the lay of the land so well. And I don't want to leave you with, boy, I really wanted to make this point. So put on your thinking caps. What are the things perhaps I'm not properly touching on that you think are most important takeaways? Again, first from the macro view, then as you're speaking to people and investors and the like. Greg, we'll start with you and finish with Dave.
Yeah, let's start with this. The reason we're seeing this correction doesn't have anything to do with the U.S. economy. The U.S. economy is in good shape. This is based upon what's happening elsewhere around the world. And because of that, that's what tells me, just as the same thing we saw last summer, that this is just a brief correction. And as Dave said, we get some stability in oil prices, we get some clarity on China, markets will recover, markets will bounce back. And so you've got to be in it to win it. Resist the urge for that knee-jerk reaction of selling in a panic. That's definitely the wrong move.
Dave?
Well, I think as we work through the, as we work through the year, you're going to see the lower price of oil work its way into the economy in terms of consumption. And I think you're going to see strengthened earnings, corporate earnings, as we work into the second and third quarter. And once we have that kind of strength in this economy, we're going to be fine. But I don't see a recession. I agree. It's a very remote at this point.
Not go growth, but slow, steady as she goes.
Yes.
Exactly.
Yes.
Finally, let me close on an interest rate question, only because a lot of us confuse what the Fed did recently, raising interest rates, the funds rate, a quarter of a point. People think, how's that going to impact me? Just close with a note for people's pocketbooks on what they can expect to see in terms of home loans, should they need loans, refi type of loans, car loans, and because we hear so much about interest rates now, kind of deconstruct that for all of us average folks at home, what that'll mean for our pocketbooks this year. Dave, we'll start with you on that one.
I think you'll see, I think the Fed will continue to raise rates. It may not be at a torrid pace, maybe in a slower pace than we thought before the year started. But you're going to see rates go up, and you'll see them early in auto loans. You'll see them later in mortgages. But I would yield to the bank rate monitor to field that.
But historically, well, there's, I always tell people say, oh, the mortgage rates went up above 4% sometime last year. Back before I said 4%,
right.
It's still historic.
Right.
So give us perspective here on what we can expect for our pocketbook.
Well, you mentioned 4%. If there's a benefit to all this volatility we've seen in the market, it's that mortgage rates have come down over the last couple of weeks. Actually, mortgage rates went below 4% this week. So, good refinancing opportunity for people that may have missed the boat. The fact is, everybody freaks out about mortgage rates when they hear the Fed raising interest rates. And the reality is they're two completely different things. Mortgage rates, they move based on the long-term outlook for the economy and inflation, not based upon short-term moves and interest rates. The things you got to worry about are your adjustable rate mortgage, your home equity line of credit, and your credit card. That's where you're most susceptible to rising rates.
Final 20-second takeaway. Anything you want to throw in there?
Well,
you cover the bases so well, it's hard to get that in. You're both so good at it.
Well, I think, again, the odds of a recession, very slim. The only thing we have to fear is fear itself, right? It's a risk if people, consumers and businesses, get sufficiently freaked out that they stop spending. And as long as we get some stability and some clarity on those things, this is a temporary pullback and we don't have to worry about that.
Thanks for the hand holding. Dave, your final nugget as you hold a lot of hands this week, and I'm sure next and the next after that.
Yeah, recessions are not I don't see a recession in the cards. Corrections are normal, they're routine, and they're healthy. We've not seen one since 2011, so we touched on one back in August. We're doing it again. So this is normal and routine. We'll get through it.
Gentlemen, as always, thank you for your expertise. Really appreciate it, as I know our audience does as well. Thanks so much for taking time with us.
Thank you,
to
Michael.
the point. Coming up, the latest Florida poll on the presidential candidates. We have the inside numbers. Poll on the presidential primary in Florida had some of the candidates talking, especially Donald Trump, as it shows his lead growing in the state and the choice of almost half the Republicans. The Florida Atlantic University survey of likely Republican voters show Trump is the choice of 48%, followed by Texas Senator Ted Cruz, 16%. That is a whopping number. Florida Senator Marco Rubio, 11%. Trump way out in front, and former Florida Governor Jeb Bush, a two-term governor, way back at 10%. Ben Carson, the biggest drop for Dr. Ben Carson, the West Palm Beach resident, 3% in the same poll. It was done in November. He had been at 15%. Rand Paul rounds out that group, but way back with Carson at 3%. As for Democrats in this Florida poll, done by FAU. Hillary Clinton, the overwhelming choice, 62% of likely Democratic voters would choose the former Secretary of State, 26% would choose Senator Bernie Sanders, and 4% former Maryland Governor Martin O'Malley. So first we have to get by the business of Iowa and New Hampshire, but Florida will be coming like a freight train here soon. Joining me, one of the coordinators of the polls, the man behind it, Dr. Kevin Wagner, political science professor at Florida Atlantic University and a familiar face to us here on To The Point. We have the raw data, crunched down, now give us the analysis.
Yeah, I think it's pretty clear. You know, Trump has had a pretty good run nationally, and sometimes the national numbers reflect inside the state numbers. And I was surprised to see how high up he was in our poll, substantially higher than just about anyone. In fact, you have to start adding up the other candidates to try and reach where Trump is in that number.
What's going on?
Well, his strength is really growing inside of Florida among Republicans. In fact, when you try and break down his numbers, he does pretty well in lots of different groups that you wouldn't necessarily expect, including among Hispanic Republicans as well.
So, yeah, break that down a little further. Give us the breakdown of where his support's coming from. Go through that a little more closely.
Yeah, well, the one thing we have to be careful about when we look at Republican primary voters, when we start subdividing, we're talking about relatively small numbers. So I don't want to overstate his support among Latinos, but in our polling, he does particularly well. I think 54% of Latino Republicans supported him. He does particularly well among different groups, including African Americans, though that's where Cruz does particularly well.
You want to be careful because this is in a universe of Republican primary numbers, and it's easy to extrapolate that to overall Hispanic support, which certainly we saw in the last presidential election.
Would be considerably lower, but his strength among Republicans, which is really the key to a primary day, has grown just tremendously between the three polls that we did, making his, you know, it's not that we can't guarantee, there's no guarantee that this number will hold up and he'll do particularly this well in 2 months from now. But at this point,
because we're talking March, so March is a long time.
Yeah, a week in politics is forever, and we're talking almost 2 months. So it may not hold up this well, but at this stage, it's really remarkable to see a candidate, especially above a senator from the state, including Marco Rubio, and a governor from the state.
Two-term governor.
Yeah.
Who last year, he or Rubio, certainly Bush was, all the money was he's got the organization, the money, the name, the background. It'll be Bush's to lose. And right now, Donald Trump, taking it away, is in an enviable position. And you touched on something important. Lots can change in politics, but this kind of commanding lead, and you've seen it in the coverage over the last 6 to 8 months, went from, isn't he an interesting novelty, the reality TV star, the mega billionaire, and the like, the real estate man, but now to somebody, people, when they see numbers like this, and now we're in the heart of Decision 2016, this isn't ephemeral. This is real.
No, this is
he's
real.
tapped into something.
And clearly, I think for a long time, a lot of people, even people like, you know, that were doing polls like me, were saying, the number will fade as people get a little more serious about who they're going to look at. But that's not what happened. The numbers actually gotten considerably stronger. And, you know, one surprising thing in the poll, too, was Rubio's number actually declined. He went down about 6 points in our poll.
We tend to be so caught up on the Republican side of this, talk about the Democratic numbers. Hillary Clinton, not surprising given her history here, but nonetheless, commanding numbers in Florida when you hear all the talk about the tight race in Iowa and New Hampshire. Talk about that and the challenge she faces when Bernie Sanders is making a charge in Iowa, presumably, according to polls in New Hampshire, and how that bodes for her, because she has an awfully commanding lead here.
I think one of the great confusions that happens is we focus a lot on the early states, and Iowa and New Hampshire are very unique sort of demographically and how it works in those states. Iowa's Democratic Party tends to be a lot more liberal. In fact, there was a poll there that suggested around 43% of them identified themselves as liberal. I mean, I'm sorry, as socialist. That's a much more fertile ground for Bernie Sanders, as is New Hampshire, which of course is right next to Vermont. Florida, very, very different environment, and that's where you see Hillary Clinton's strength.
Let's look at the favorable, unfavorable numbers, if we can go those. Mr. Trump leads in this category as well of likely Republican voters. What stands out is Mr. Bush, almost even in his favorable, unfavorable numbers. As you look at that, 47% favorable, unfavorable 45, almost a split. Trump, a commanding number, 70 to 24. Rubio does quite well as Senator Rubio, 63 to 27. And you see the numbers for Cruz. But again, once again, Trump's favorables here. part and parcel of a trend line right now that makes him the muscular candidate to beat without question at this moment in Florida.
Yeah, I think the story really here is Trump at 70%, suggesting there was a long time where people thought that Trump's segment of the Republican Party was relatively small. He spoke to people that were concerned with nativists and immigration. He spoke a little bit to some of the other conservative elements of the party, but people didn't think he spoke to most of the party. Our numbers suggest that if part of the party didn't like him before, they're starting to like him now.
Let me ask you one final question. We've talked a lot about this, though. It's always hard to extrapolate what we see as support and people who will actually, outside of a poll, go and vote. And there has been some questions from critics of the numbers or of Mr. Trump saying, when it comes time for primary day, let's see how many people he really gets out. Any trend lines, any way to extrapolate your sense of that above and beyond the polling you've done? It's interesting, and by the way, has been cited across the country at this point. Talk about that, though.
Yeah, I think what you're talking about is sort of likely voter modeling.
Sure.
So essentially what we're trying to figure out, because we don't really care what your opinion is for a poll purpose, at least, if you're not going to actually turn out and vote, right? So the question is really, are we polling the right kind of voter that's actually going to show up and vote? That's a very, very difficult thing to actually pull off these days, because fundamentally you're not sure what the electorate will look like come March versus what it'll look like in November. So, we do some modeling to that regard. In other words, we try and make our numbers look like we believe the electorate has looked in the past and will look, but sometimes you can have some differentiation there.
But even if you expect some give back, in today's mobile world, you can't get a hold of people. A 70% number right now in terms of his ratings and his overall numbers are large enough that even with the sample area, very muscular Donald Trump in Florida.
We would have to be astoundingly wrong. And
back in a moment.
Almost impossible.
I want to thank all our guests today, and thank you as always for spending time with us on today's To The Point. If you'd like to send us a comment about the broadcast, go to WPTV.com, click on the To The Point page. As always, wishing you and yours a great day and a great week.